So good morning, and thank you for joining us for the second webinar in a series titled In Conversation with the Regulators. My name is Mavuto Sakala. I'm the managing partner for B&M Legal Practitioners, which is a member of Bowman's in Lusaka, Zambia. The insurance sector in Zambia is regulated and supervised by the Pensions and Insurance Authority, the PIA, pursuant to the Insurance Act of 1997, as was amended in 2005. The sector comprises approximately 35 insurers and reinsurers and several brokers and agents. Zambia's uptake of insurance services remains relatively low, with the FinScope Zambia 2020 survey report recording an increase to 6.3% from 2.8% in 2015. In terms of the sector's contribution to the national GDP, the 2020 PIA annual report puts the estimate at about 1.3%, with an annual growth of over 20%. To help us understand the sector in Zambia and point to the future of this important industry, we will be talking to the acting registrar and chief executive officer of the PIA, Mrs. Namakau Mundia Ntini. Mrs. Ntini has been with the PIA for over 13 years. She has been actively involved in the financial sector reforms in Zambia, including the Financial Sector Development Plan, FSDP, the SADC-CISNA initiated project that developed the Microinsurance Guidance Note for member states, and the current National Financial Inclusion Strategy, where she serves as on the implementation committee. Mrs. Ntini was also instrumental in the work that led to the enactment of the Insurance Act of number 38 of 2021, which is yet to come into force. Leading the conversation will be Christine, a partner in our Johannesburg office under Banking and Finance Department, and a member of the Banking and Financial Services Regulatory Practice. Christine works with insurers in the South African market, brokers and industry associations. Her experience includes liaising with short-term ombudsman, advising and assisting with various applications with the insurance regulator, as well as providing regulatory opinions to the insurance industry. She has a good relationship with the insurance regulators, and her practice knowledge and understanding of the insurance industry ensures that she provides strategic and commercially oriented advice. I'm confident that this is going to be a very insightful conversation. I hand over to Christine. Thank you, Christine.
Thank you, Mavuto, and good morning, everyone. Good morning, Madam Ntini. Before we carry on, just some housekeeping. As participants, you are automatically muted and the chat functionality has been disabled. So if you have any questions during the webinar, please make use of the question and answer tab at the bottom of your screen. Your questions will then be submitted to the facilitator. A few questions may be chosen to be discussed by the panel as appropriate during the webinar. Please note that we're not providing any written responses to the questions. And finally, just so that you know, if you ever want to watch again this webinar, it is being recorded and a copy will be made available on our website later today on bowmanslaw.com. Good morning, Madam Ntini. I'm extremely happy to be interviewing you. I've worked quite a lot with my colleagues in Zambia and to see what's being done in terms of your financial sector development and the changes in the regulatory regime. is quite exciting and in certain instances quite similar to what is happening in South Africa. From a Zambian perspective, could you perhaps just tell us what are the notable trends that you've seen in the insurance sector?
Thank you, Christine, and good morning to everybody on the panel and those that are following the webinar. Allow me to just, first of all, acknowledge our gratitude as an authority for the opportunity to speak to yourselves and really just share some insights into what is happening in the Zambian insurance market, as well as some of the issues that are coming up in the near future. In terms of the trends that are notable in our market, perhaps when you talk about the insurance market in Zambia, it really belongs to the global insurance industry. And so it's important to probably just speak to some of the issues that are sort of obtaining in the global market. A recent report that was shared by the Swiss Re Institute does project that the global insurance market is poised to grow by a rate of about 6.1%. And I really think it's really coming from, when you look at the results that are shared in that report, it's really coming from what has been happening in the global economy. I mean, and when you look at issues of the COVID-19 pandemic, obviously there are a lot of issues that then bring the whole value proposition of insurance into the fore. And so, yes, I think we have seen that despite probably the claims experience that we saw in the health sector across the globe due to the COVID pandemic on the health business lines, as well as other effects on the actual businesses themselves, we still see that insurance still presents a very good value proposition. And so coming home to the Zambian insurance market, as an authority, we are seeing that the market will continue to grow in terms of the top line. When you look at the combined business results from the general insurance sector, or short term, as it's called in other markets, as well as the long-term sector or the life sector, we are going to most likely have a growth of about 15% in the market. Obviously, there are certain issues that continue to be a pain point for the market, as well as ourselves, Christine, as a regulator. We still need to deal with certain poor practices that we see, like the governance issues, the competition issues that are coming to the fore, the topical issues of treating customers fairly. I think it's one of the issues that definitely as a market, we need to sort of, nip it in the bud, if you like, if we really have to then have the confidence of the general financial sector, as well as the population at large, to see insurance as an appropriate risk management solution. So those are some of the issues that we are seeing trending in our market. It continues to grow. Certainly the profitability of a number of players is still in question because of maybe many underlying issues. I think we'll talk about some of these things as we go along in the conversation. I think I'll be able to highlight some of the issues that are affecting the profitability of the entities. Yeah.
Thank you. I understand that there was a couple of changes that were introduced last year, including VAT being payable on insurance premiums and a 20% withholding tax on reinsurance premiums that are paid over to foreign reinsurers. And as you rightly said, I mean, Zambia is part of the global insurance market, so reinsurance is also critical to the growth and development of any insurance sector. What has this been? How has this impacted the Zambian sector?
Well, I mean, naturally, Christine, nobody wants to be taxed. So as you'd imagine, the sector itself would feel, they would come up with very good reasons why they shouldn't, why the tax shouldn't be imposed in that sense. And in this particular area, we're looking at the withholding tax as well as the VAT. By the way, the VAT is a reintroduction because VAT was existing in the insurance sector at some point, and it was later replaced with an insurance premium levy, and then subsequently the VAT was reintroduced. Now you must note that the preserve of introduction of any taxes in any sector still remains government preserve, because as part of really galvanizing resources into the central treasury, citizens and businesses are taxed in that sense. And so the insurance sector doesn't remain immune to that. And we have seen it in other jurisdictions. So really to put it into context, Zambia is not the first country that is moving in this direction. I think we've seen it in Ghana, we've seen it in Rwanda, in Uganda, and other countries have also imposed similar kind of taxes as well. What we are seeing sort of churning out on the VAT, the challenge that was there was really the interpretation of what you would call the tax point from a VAT point of view. At what point does then the tax kick in? And when you look at the Zambian insurance market, it's highly intermediated, meaning that we have a number of intermediaries that are playing in the sector. If you look at the figures we have right now, the broking entities are almost hitting 70 in our market. And so it shows you that a lot of business is really pushed through the intermediaries. And so that seemed to create an administration challenge. But of course, as a market, conversations are still going on to try and see how best we can refine some of the teething issues that have been highlighted in that space. On the reinsurance, introduction of withholding tax on insurance, certainly some of the concerns that have been raised are really notable in the sense that it certainly does increase the cost of insurance, if you like. And most of these, in most cases, this cost will be passed on to most likely the policyholders. And so, yes, those that reinsure a lot, and in terms of most of their reinsurance is offshore or outside the jurisdiction, are obviously going to feel the impact of that withholding tax on insurance. But I must be quick to say that we do have some form of double taxation agreement with a number of jurisdictions. So a number of, and the tax authority, I must say, has come out to say that most of the concerns that the players have may probably not exist in a sense, because a lot of them deal with jurisdictions where Zambia has entered into double taxation agreements. And so that tends to take care of that. But yes, it is something that the industry is talking about. And like I earlier said, nobody wants to be taxed at the end of the day. But we believe that the intentions around it was really to encourage a lot of localization of the premiums, because we have seen on the short-term or general insurance sector, if you like, there are certain risks that would comfortably be underwritten in the jurisdiction going outside the jurisdiction. I mean, motor business should honestly not find itself outside Zambia. When you look at property, you should not find itself outside Zambia. So we've seen that there are certain business lines that should really allow the market to sort of come together and really pull together their muscle and their capacities in terms of how much risk they can absorb, be able to absorb most of it, and then pass it on to the next layer. And the next layer within the market is really the reinsurers, because we do have reinsurers players in the market that could comfortably also take on this risk. So yes, it's really also meant to promote from that front a lot of the local reinsurers, because we've seen an interest of a number of reinsurers coming into the market. So, by allowing a lot of the risk to remain in country, it helps the local players to be able to grow in that sense.
Yeah. And I mean, what we've seen is it's not only in Zambia, but in the rest of Africa, including South Africa. I mean, that is a big drive, is to retain premiums in the country and not to have unnecessary risks being reinsured offshore. So obviously different jurisdictions implement measures in different ways. And obviously this, this one of the intentions of this withholding tax is exactly that, is to maintain premiums where possible in country. But also what you are saying, Madam Ntini, is that insurers should look at consulting with my colleagues in Zambia potentially for more tax advice if they are not aware of the double taxation treaties that are in place with various jurisdictions. You as the regulator of the insurance sector, what do you owe the success of this industry? What behaviors would you like to encourage or rather discourage?
Allow me to probably look at it from maybe a twofold. First of all, in terms of the service providers themselves, as well as the customers that they serve. The service providers, we have seen that a number of them have really evolved. And by that, I would like to highlight that we have seen entities realizing that good underwriting practices are really cardinal. I think along the way, when you have very strict, sort of stiff competition in the market, Christine, you will find that people tend to throw away the good practices that the principles of really insurance underwriting, if you like. And so we've seen a number of them are getting back to the drawing board because they have seen that they have gotten their fingers bent. And also a number of products that were coming onto the market, I think a couple of years back, were those that were of a generic nature. And by that, I mean, products, there's always this, issue that we always highlight, that you find underwriters sit in their boardrooms and come up with products and take them to the market without necessarily understanding whether this product is going to meet the needs of the customers. So we have seen that a lot of them are now investing in this space where they really need to then develop products that are very innovative, products that are customer-centric, as the buzzword says. And so we really feel that that's really a success that we have seen in the market. A number of them are realizing that we need to get back to the drawing board. And first of all, our own underwriting philosophy has to really be in place. And then we have also seen that a number of the players are also embracing alternative distribution sort of mechanisms or arrangements, because the typical insurance market in Zambia was where you have agents and brokers that are hopping from one place to the other to try and sell these products. But the market has evolved. We've seen that with the introduction of the digital space, a number of players are embracing that, and it helps in cutting down the cost. It helps in efficient service delivery, and really, it's really meeting the needs of the customer. Because when you look at our FinScope survey, surveys that have been done over the years, if you sort of really break them down, you really see that one of the issues that we had was access. Access has always been one of the barriers that has been resounded in the FinScope surveys. And so a lot of insurance companies have now realized that in order to reach their customer, they have to understand the best way that the customer needs to be reached. And so we've seen a lot of them, sort of reaching out with a digital solution. I think the mobile platform is one of those that's really sort of coming out very strong, as well as other means that the other, players tend to embrace in that sense. On the customer side, we have seen that the customers are really taking an interest in insurance and realizing that insurance is really a viable risk management option because of clearly the good experience that some customers have had. We've seen a number of success stories, and we feel that a lot of people are definitely becoming aware of the need for insurance. I know that when you look at our FinScope survey, it still talks about awareness as being the biggest barrier to the uptake. But we feel as we interact with the market, we notice that a number of them are really understanding a bit more about insurance, and perhaps credit could be given from the movement that we've seen from the FinScope results, from the 2.8 that was there in 2015 to the 6.3 that has been recorded in 2020. Yeah, so basically, I think those are some of the successes that we have seen in the market. A number of them are also alive to the fact that, you know, we are living in the social media age. So a number of them are also conscious that once the customer complains, especially on social media, it's bad publicity for them. So we've seen a number of insurance companies really trying to attend to their customers in a more efficient way, in a more engaging manner, if you like. Yeah.
That's extremely positive in the South African context. We've had to codify principles relating to treating customers fairly, which insurers and brokers are required to obviously comply to the manner with customers. So it's really interesting from a Zambian perspective. There's been kind of this push for people to develop more customer-centric products and understanding the need to look after customers and treat them well. Other practices have identified reinsurers or brokers for intermediaries having participated in, which is contrary to Zambia's insurance regulation. And would you to refrain from conducting?
I don't know whether it's from my end, Christine. I think I lost you at some point. I think it was cutting. I don't know whether
Sure. Just going on to the next question, I just wanted to know, what are some of the common market practices that you've identified with insurers or the broker and intermediary market that is contrary to the spirit of Zambia's insurance regulation, and which you would request people from refraining from conducting?
Oh, okay, thanks. Well, I think one of the practices that has been a pain point in the market, I think when you look at results of, I think the PwC surveys that they've done, I think they've probably done about 2 or 3 of them now. They clearly show that one of the vices or pain points for the market, if you like, is really the practice of undercutting. And by that, I mean really having poor sort of underwriting practices. This is where a risk is not appropriately priced, and as such, the insurance company really is getting a raw deal. And if you like, they literally end up being into a gambling business as opposed to underwriting, because then anything that goes wrong, you obviously get your fingers bent because you haven't sufficiently put your premiums into this reserve that you can tap into when the claims arise. So underwriting is one that has been a pain point. And I must hasten to mention that as a regulator, we have over the years, sort of looked out for this issue, because we did issue at some point to the market a guideline that speaks to how they must not underwrite and how they must not accept certain businesses from clients that sort of request them to do that. We've seen it on the long term or life business. This is usually driven by the competition in the group life business. You find some clients literally sort of dictate to the insurers what sort of rates they should charge them. And these insurers, rather than sort of standing their ground, they tend to go for those rates. And it's because if the respective insurer doesn't succumb to that, the client will then go to the next person. And so it really requires, beyond regulation or supervision, it requires market discipline as well to be able to realize that it is not going to support the market in terms of growth, as well as the sort of bad vices or eggs, if you like, that we're introducing into the market. So undercutting has really been one of the biggest pain points, and it gets down to really the poor underwriting of the risks. And we've also seen poor underwriting in certain type of risks, like now the guarantees that seem to be popular on the short-term insurance space. And we've seen a number of them underwriting these risks without the appropriate structures in place. By that, I mean, you must have the appropriate reinsurance in place, you must have the appropriate security in place, and you must collect the appropriate premium for it. And that really speaks to the pricing. So we have seen that that's one of the issues that has been a pain point. And when you really drill down to it, some of it really presents itself from a governance point of view. I think we have seen that some boards or shareholders are really demanding so much from these entities that they end up getting into practices that are really unconventional and inappropriate for the market. So yes, these are some of the issues that we hope we can address with the operationalization of the new Insurance Act, because obviously, as we talk to issues around solvency, you'll be able to see that it will be very difficult for you to undercut or really not price your risk appropriately, because you definitely are just setting up a burning platform for yourself.
Thank you, Madam Ntini. That is, underwriting is the core to being an insurance company.
Absolutely.
A couple of years back, I went and did an insurance conference in the United States, and it took them a couple of years to actually finally realize that if they didn't underwrite prudently, insurers would fail to exist, because they could actually not rely on investment income in terms of premiums collected. It all comes down to the underwriting. And that's the purpose of having actuaries and all those critical skills. So I think everyone has realized that it doesn't pay to undercut, especially when you don't know what potential risk could come in the future. We saw with COVID, and then the impact that has on reserves and payment of claims. And so, you know, part of treating customers fairly is also, as you've mentioned, you know, acting conducting the business in a good state of governance, and not just about every financial year end, but looking at what the results could be in 10 or 15 or 20 years time.
Yeah, absolutely.
Now just going to chat about the new Insurance Act, which I'm really extremely excited about. Seeing some of the going to be introduced through the Act. But firstly, it was enacted into law in May of 2021. What is the current status, and when is it likely to come into effect?
Well, the current status is it is yet to be operationalized, if you like, because within the piece of law, there is a provision where the minister has to sign what is termed as the commencement order for the act to come into effect. So we still remain very optimistic that the act will obviously take off before the close of this year. Maybe just to share a little background with colleagues that have joined us on this call is that the reforms around the financial sector in Zambia started around about 2009, 2010, and really the reforms were cutting across the broader financial sector. So the central bank, which is the regulator of the banking sector, obviously had their bit to do. The Securities and Exchange Commission, also the regulator of the capital markets, did their bit. And one of the issues that we realized was that we were all sitting with laws that had not been changed over time. And so they were really not speaking to the issues that we're presenting in the market. And there was need for us to then not only modernize the laws, but also at the barest minimum, try and come up with some form of harmonization, because a lot of players, I think as is common in other markets, you'd find players interface across the whole financial sector. You'd find maybe one entity is also supervised by the central bank, supervised by ourselves as the PIA, and supervised by the Securities and Exchange Commission. So how do you then, as supervisors, come up with a regulatory or supervisory framework that is not so confusing and that doesn't demand a lot, even from a cost point of view, from a resource point of view, and investment point of view, from the service providers that you have sort of charge over. And so that was one of the motivation of really the agenda that we started under the project that was read out in my profile, that was called the Financial Sector Development Plan. It was really to modernize the laws and to try and do some form of harmonization. So the banking law went ahead and was enacted much earlier. The Securities Act as well was enacted as well. And in 2016, the banking law, I think that was 2017. And so naturally, you could see that the insurance law was the one that was sort of lagging behind. And it's really because of the fact that when you look at the Pensions and Insurance Authority as a regulator, our institutional arrangements sit in our piece of legislation that we administer on the pension side, and this is the Pension Scheme Regulation Act. And so there was reforms that were initiated in the pensions sector. And so that they sort of slowed down the process that we were undertaking. But of course, I think the market remained very optimistic and resilient in terms of advocating for the enactment of the law. And we saw that coming into effect in 2021 May, as you rightly observed. So yeah, to answer your question, the law is there and we are really waiting for it to be operationalized. I don't imagine that with that sort of journey that I have just outlined, we would take any longer, because there are a lot of very progressive provisions that we really need to push forward. I think the market has really been eager. We've seen a lot of people that really want to enter the market really into specific windows that the law is sort of opening up to. So yeah, it will come into effect. We're quite optimistic. And to answer your question, I would still say by the end of this year, we will have the new Insurance Act operationalized. Great.
I thought let's just discuss in detail some of the proposals that have been introduced by the new Act. These proposals tend to be hot topic items amongst clients. So the first relates to the solvency requirements. What can insurers now expect to see?
The solvency requirements and capital adequacy, as you would call it in other markets, is one that has been topical in the market, in the sense that when you look at our current framework that sits in the 1997 Act, it's really, if you like, a rules-based. There's either, the concept of solvency is asset liability matching. So you have assets that are either admissible or inadmissible, and then you have the liabilities that you need to match them, and then you need to be in the comfort space. If you're a long-term insurer, a life insurer, your assets must exceed your liabilities. If you're admissible liabilities, if you are a short-term insurer, your admissible assets must exceed your admissible liabilities. by 10%. So when you look at this solvency framework we have, it is one that is really compliance-based. And so service providers or entities merely just have to meet that 10% or demonstrate that their assets are sufficient to cover their assets. Their liabilities, but it doesn't speak to really what type of the assets is this entity holding, and are these assets responding to the sort of risks that this entity is underwriting. And so the proposed solvency framework is a very progressive one, and I believe that the market has resounded that as well, because they have seen that from a market point of view, we are not going to grow if we continue with a compliance-based type of risk. And so it's one that we are going to see that it's going to mimic what is presenting, from a global point of view. I think South Africa, Christine, has already moved into Solvency II, if you like. And so we are trying to move in that direction so that we can allow our entities to be much stronger, to be better capitalized, and to be very good risk managers. We were initially talking about poor underwriting practices. And so when you look at this solvency framework that the new act is going to introduce, I don't see how any insurer worth their salt would still continue with the trajectory of poor underwriting, because it will certainly show in terms of their ability to meet the solvency requirements, because they have to now write risks, appropriately price them first of all, and then be able to hold sufficient assets to match the risks that they are taking on or the liabilities that they are taking on. So we believe that it's a very good one for the entities themselves. They will be more financially sound or resilient, if you like, to be able to write, first of all, good business lines, also to tap into the other business lines that the market tends to shun. We do have quite a number of risks that are dubbed as mega risks in the market, and these really speak to all these sophisticated risks of mining, engineering. We've seen a lot of these risks hardly reside in Zambia. They end up in offshore markets because the entities themselves are not strengthened enough, they are not well capitalized. So this solvency framework will allow them to really be stronger, to be able to compete with other players, not only within the jurisdiction, within the region, but also across the globe. We also believe that the proposed solvency framework is one that will certainly give a lot of comfort to the policyholders, because once you have entities that are financially sound, they will be able to attend to their obligation with much ease. Because when you look at what is in the offering right now in the market, we do have on the short-term side players that would hold assets in form of non-current assets, or the fixed assets, as you like. You would hold assets, maybe they would have a huge concentration. 90% of their assets are sitting in property. And certainly if claims come in, it really becomes very difficult for such an entity to then convert those assets into liquid form to be able to attend to their obligations. So we have seen that the new Insurance Act and the proposed solvency framework will sort of be one of the silver bullets, if you like, Christine, that we are looking forward to in the market to address the issues of solvency. And we believe that when issues of solvency are addressed, issues of liquidity as well will be addressed, especially for the short-term insurers, and correspondingly be able to attend to the concerns of their policyholders in terms of the turnaround of claims settlement.
Yes, that's correct. And in the South African context, we've also got a risk-based prudential regulatory framework. It's not quite exactly as Solvency II. It's obviously been adapted for our market, just as your solvency requirements have been adapted to your market. But I think the point is that many insurers, even dealing with global players, would have understood by now that premiums that are being charged by reinsurers would also be risk-based. And so, you know, in order to also understand what you are reinsuring and what you're being charged, you've got to kind of align in principles in terms of rating.
Absolutely.
The other big...
That's basically the whole framework, Christine, that we have. It talks about the quality of the reinsurance that you are also taking out. So it really is on the lines of what is in South Africa and a bit of what is happening in Mauritius and other markets, but really riding on the principles around Solvency II. Yeah.
The next hot topic is the local ownership requirements. In South Africa, we've got a specific act which obviously requires transformation and black ownership in terms of certain qualifying participants. We've seen in the South African context there being a big push by our market conduct regulator as well as our prudential regulator to have the qualifying participants having ownership in local insurers. In the Zambian context, the local ownership requirements is going to be 30% for insurance and reinsurance companies and 51% for broking companies. I think what's important is if you could explain the rationale and the reason for these proposals, and how insurance companies can be expected to comply with. And with all these things, what positive things can insurers or the market take out of this, and not necessarily see this shareholding requirements as being an impediment to growth and development. Because I think that's what's important, for people to understand, as opposed to seeing everything potentially in a negative light.
Yeah. Oh yes, I must mention that yes, it's been a topical issue right through our legislative journey. It's one that has been a very topical issue. But one of the things that I must hasten to mention is that this proposal was really one that came from the market. The market felt that, looking at how long, first of all, the country has been independent, if you like, and how the insurance market has evolved, there was a sense of, the market sort of resolved that they needed to move in a direction where they must be able to introduce some form of local content, if you like, into the insurance space. And again, similar to the comment I made on the introduction of the VAT and withholding tax, it's something that is not unique to our market. I think we've seen it in the East African market. It's something that has been prevalent. And so, yes, as it is law, and all entities that this particular provision applies to need to certainly comply when the time comes. And in terms of how they will comply, if you look at the provisions of Section 49 and I think subsection 3, it talks about the minister will issue a statutory instrument to try and give a time frame within which all entities that are licensed within the Act need to comply with this provision. How comfortable the entities will be, really, we believe that there are a lot of opportunities that are there for the Zambians to be able to take up that. First of all, players can go to the capital markets. I think one of the cry that the capital markets has had is that we haven't had a lot of activities. So yes, they could go to the capital markets to try and be able to have these, the dilution of the shareholding, if you like. And we also believe that given the sort of presentation we are seeing in the market, where a number of entities are still opening up, and these are Zambian-owned entities, it presents them with an opportunity to probably, partner with some of these, sort of foreign-owned entities, and be able to leverage on the skills that the foreign-owned entities sort of come up with. When you look at also the mood that the government has, it's encouraging a lot of private, public sector partnerships, really partnering with the locals, if you like. We've seen that even in the private sector, there's a lot of encouragement of investors that are coming into the market to try and partner with the locals, to try and see how best we can then together develop the market. There are obvious reasons why jurisdictions move into this direction. It's obviously to stem things like capital flight, because then everything remains within the country. It stabilizes, it contributes to the stabilization, not only of the economy, but of the currency as well, within the bigger economy. And so those are some of the motivations that we have seen coming to the fore. So we believe that it still remains a wait and see. And I believe that the period that is likely to be proposed is one that would be reasonable. In the proposed regulation, I think we are sitting with 4 years. The market initially wanted it shorter than that, but the regulator felt that perhaps we give it a period of about 4 years to see how best entities will be doing that. So from a supervisory point of view, we will then issue some form of guidelines pursuant to the SI to try and help the market. Essentially, we'll be asking them to give us plans of how they envision meeting the end goal that they need to meet, and then we can deal with them on a one-by-one basis. So we believe that it is one that still creates very good opportunities for the market. I must also mention that even after the passing of the law and the attendant provision that we are discussing, we've still seen an appetite for persons to come in the market. So we don't see that as an impediment for persons to enter the market. We've seen that there are quite a number of entities that are still showing an interest to enter the market, with hindsight that they would probably have to forgo on the insurer and reinsurer side. They have to forgo, or they have to partner with locals on the 30% of the total shareholding structure, and on the other side on the 41%. So we believe that it's one that the market should be able to comfortably navigate through, but it still remains a wait and see, and we'll obviously be able to assess as entities are transitioning, and if there have to be certain decisions that will be made, they will be made with hindsight of what would have been coming out of the market. So it's one that we have, the market has fully endorsed, so to say, and it has been endorsed as well by the legislators. Otherwise, it wasn't going to see the light of day from the floor of Parliament. Thanks.
And I mean, one of the key concerns is that the value of shares in already existing insurance companies. How,
Sorry, I didn't get that. I don't know whether I'm the only one that's not hearing you, Christine.
I think she's dropped off.
Shame, yeah. I can see that her bandwidth isn't too good. But I think if I heard her, she was really moving into asking, the concern is when you look at the value of some of these insurance companies, will we have persons that will come in to be able to buy those? I think I earlier alluded to the fact that they could go to the capital market. I think the capital market is one that is yearning for such kind of interventions in order for it to grow. So that is one space where they can get into. But also when you look at the fact that we have a number of greenfield companies that are coming out, it shows that there is still capacity for entities or for persons in Zambia, if you like, to be able to buy shares into these companies. So rather than probably starting out a greenfield, Mavuto, persons could decide to already buy into an existing entity that is already profitable, one that is probably riding on a very strong brand, and that way they will be able to comfortably, sort of have a quick return on their investment, as opposed to what we see in greenfield, where it takes a bit of a longer trajectory for one to be able to enjoy their investment or have a return. So yes, it is a concern that is there, but to the extent that you haven't gone to the market and there's no buyer that has come through, you can't then hold the view that there will be nobody to buy. So let's get there. Let's try and see how best we can navigate around it. And then we can come back and have this conversation to say, no, there's nobody available to buy these shares. But to the fact that we haven't gone to the market, and the fact that there are entities that keep coming, seeking to get into the insurance space, and these are Zambian-owned entities, it shows you that the Zambians do have the capacity, perhaps rather than having a motivation to set up my own greenfield company of Namakau Ntini, Insurance Limited, I could then enter into and partner with the others, because I'll not only be riding on the strong brand, I'm getting into an entity that's already established, and that should be able to give me some quick returns, if you like. So it's still, I believe it's still a wait and see, and it may be too premature to conclude that there'll be no capacity to buy this, because you haven't sold yet, you haven't gone to the market yet. So up until we see that and there's actual evidence to that effect, then we can probably come back and have a conversation on this. Otherwise, I think perhaps, it's just the usual apprehension. Obviously, that happens with a move like this. And it's understood, I think, for the players that are really coming out of Zambia. It's clearly understood. But I think one of the comforting issues that are there is that the control will still be reposited in the foreign, shareholding, if you like, on the insurers and the reinsurers. On the broking side, I mean, when you look at the typical broking business in Zambia, we believe that we need to grow this space, because the fact that we have so many players in the market in itself suggests that we need to find a solution to try and ensure that the players that are coming in are only those that are going to be strong. So we believe that it's an opportunity for cross-pollination of skills from those that are coming out of Zambia, those that are already strong brands. They will be able to sort of help the Zambian-owned entities to also be able to sort of come up and develop. Once we have the Zambian sitting really into these entities. So we believe that it's something that is not alien to the Zambian market. In fact, Mavuti, I remember one time attending some forum in West Africa, that was Ghana. Somebody asked me and said, why is it that in Zambia, the smaller broking companies are not growing, and the ones that are growing are only those that are foreign owned? Don't you think that perhaps there has to be a deliberate policy to try and help these entities to grow. Probably the bigger ones come with, and by no means, I'm not attacking anybody. I think it's not my space as a regulator. Perhaps there's skills that we need to tap into, that the Zambian-owned players need to have. So, yeah, it's still a wait and see, Mavuto. I don't believe that we'll not have anybody being able to buy these entities, I think, given the reasons that I have outlined. Yeah.
Okay. Okay. Thank you, Ms. Ntini. Christine, I can see she's back. Are you back?
Yes, I'm back on.
Yeah. Just to let you know, there are two questions. I think one has been answered.
Yes.
Yes, sure. Thanks.
Is there any other question, Mvutu, that you'd like to put forward to Madam Ntini? No?
No. You can. Continue.
I can see that we're running out of time, but what I would really like to get your insight in, Madam Ntini, is on the proposed classification of insurance information. We've seen in South Africa and we've seen globally that core to underwriting is having policy information, in terms of rating of current risks, future risks, and also identifying who the policyholder is. My understanding is that there could be a steep cost for insurance players hosting their data in Zambia if they externalize the holding of that data. What is the regulator's position on this?
Yeah, Christine, it's not so much of the regulator's position. I think it's really the market position, because the regulator, clearly has to engage the market. And so it's really a market position. And also really looking at, first of all, the motivation behind the issues around the Data Protection Act and the security issues that are there. First of all, I think we must appreciate that the motivation behind the act, I think, is very good. It's an important one. I think issues around data security, especially now that we are literally living in the technology age, is really come to the fore. The conversation around data security is one that you cannot ignore. As regulators as well, it's one of those that we are obviously concerned about, because, personal client data may end up in the hands of persons that are not supposed to have it. So when you come to the insurance sector, the nature of insurance sector is, first of all, when you're onboarding a client, you really need to know who this client is. So you get all their personal details, if you like, because you have to obviously risk profile them for you to do the appropriate underwriting that we were earlier on alluding to. So that is really the starting point. And so the concern is, where is this data kept? So when you look at the whole insurance value chain, first of all, if you're going to use service providers like MNOs as part of your distribution channel, MNOs as in mobile network operators, they would probably also want to know who is this person that we are actually, who signed up for this insurance policy. So they also hold part of the data. When you take it to the next layer, which is the reinsurance layer, the reinsurers also, especially when you look at the facultative insurance business, they are more interested in really getting to know the risk profile of this person that, or the risk that they are taking on board. And so this also is another level where data is shared. And some of these reinsurers, most of them are outside the jurisdiction anyway, because of the nature of insurance. Whether the reinsurers, first of all, goes through the local reinsurers, they end up also retroceding into offshore markets. And those offshore markets are not going to give them the support if they really do not have the sort of data or information around the person they are covering or the type of risk they are really underwriting. And so this is where the concern came in terms of the market, to say how best then can we address this issue, because the intrinsic nature of insurance may require that data is held by persons outside the jurisdiction. When you look at the backup solutions that are now there, we are now in the cloud-based backup solutions. Again, there's been an outcry to say the sort of data backup solutions that are in country may not be able to deal with the sort of business that we have. We also have another segment of entities that really leverage on the group kind of arrangements or solutions that are offered. So if an entity is part of a group, they'll obviously want to leverage on the data handling solutions that are in place at group level, as opposed to them sort of coming up with their own in-country, because that is an extra cost that ends up being passed on. And so, yes, the market did raise those concerns, and we obviously put together a presentation from the insurance market, really under the hand of the authority, and it went in that sense. We are yet to really see how those recommendations are going to be addressed, and how we are going to move forward. So yeah, in a nutshell, that is really where we are on the issues around the data security and the issues of really client data and how that is basically managed.
Thank you, Madam Ntini. I really enjoyed this conversation with you. It's so interesting to see the parallels and the similarities between the South African context and Zambia. And also just for everyone on this seminar to also understand that I've now been to the UK, the US, and all these principles are very similar that are being applied in those various jurisdictions. So it's exciting to see that being part of the insurance sector is truly a global sector. It's not an in silo sector. Again, thank you very much. Mavutu, would you like to just close off?
So thank you, Christine. I would like to thank Mrs. Ntini. We'll be calling on you. Thank you so much. It's been a very insightful presentation. We would also like to thank the participants. If you have any questions, you can contact us. We'll get back to you. So thank you so much. Thank you, everyone. Mrs. Ntini, have a good day. And Christine, thank you so much for moderating the webinar. Have a good day.
Thanks, Christine. It was my pleasure too. And yeah, thanks to everybody that participated. And yeah, please feel free to reach out even directly to the PIA. I think we can attend to some of those questions. I think our contacts can be shared. And yeah, it was really a great chat. And thanks, Mavuto, as well. Thank you.
Okay, thank you. Have a good day.
Thank you, everyone. Goodbye.
Thanks.
Bye.